Hello everybody, Gary Massa with Massa & Associates right here at Pacific Sotheby's International Realty, and welcome to the October edition of How's the Market? Again, we are now walking into about a week or so into the fourth quarter of 2019. Can you guys believe that it's already the end of 2019? It seems like this year just flew by, but now we're looking at the holidays. Halloween is right around the corner. New Year's is coming up. I just can't believe this has gone all this fast. But what that means for our real estate market is typically in the fourth quarter, seasonally, we start to see less homes coming to the market, but it's a good thing because there's also less competition for buyers out there as well. But at the same time, we do also start to see about a 3 to 5% pullback, from the seasonality. That's been my experience in my career here in San Diego over the last 12 years. So we're going to go over the October numbers that are based actually on September sales from the North County Homedex report. Single family detached homes that have closed in September. And then we're going to go into the best and worst performing markets here in San Diego County and a couple in North San Diego County, which I always find really interesting just to kind of break it down just on on a micro level about which markets are performing best and worst for various reasons. So anyways, without further ado, let's get right into it. So in October, actually September closings, our inventory levels were down a whopping 21% versus the same time period in 2018. We're at just under 2,400 homes on the market, single family detached homes on the market. Our month supply is down to 2.7. Now again, as you might have saw from the last video that we did, the last about 6 months, our month supply has actually been shrinking. It's kind of normal for this time of year, this year, but we are starting to see an increasing pattern, and now it's been pulling back over the last few months. But comparative to September in 2018, we're down like just over 20% at 2.7 months of inventory. Again, a normal market is about 5 to 6 months of inventory. New listings, comparative to this time of year last year, we're down about a little over 15%, with just over 1,154 new listings coming on the market this year versus last year at the same time. And year to date, meaning January through current, we're at 13,000 new listings coming on the market, which is down overall about 4% versus the same time period last year. Closed sales, our closed sales this month are actually up to 846. That's up 5%, a little over 5% versus last year. As you remember in last video, we had about 6 or 7 months of the trend of lower closing sales. Again, year to date, we're still down about 1% from where we were last year. So again, we're starting to see less homes being closed. I think that has something to do with our lower inventory levels that we're seeing. But again, something to keep an eye on when we're starting to look at trends. The median sales price. Now again, you're seeing this month in the September numbers, it's at 700,000, which is down 3.5% versus the same time period or September in 2018. Again, we're starting to see that seasonality. We're down about 3%, but this whole year, as you also remember in the last video, we've been right around even, okay? Year to date, that median price point is 707,000 for detached homes in North County, San Diego, and that's just off down 1.71% versus the same time period last year. We've been maybe up, from the year to date, we've been up about 1.5%. We've been down to about 2.5%. We've been flat, kind of bouncing around right at even. So realistically, versus last year, the prices haven't really gone up, haven't really gone down. We're pretty much flat and even, okay? Which again, my theory is we may already be in our, in the trough of our correction right before in the next year or two, we start seeing those trends tick upward again. Again, low rates, low inventory are all recipe for, for price appreciation, and we're seeing flatlining right now while the market adjusts, okay? So that's my take on it. Again, just my own theory, but we'll keep watching the market. So, best and worst performers, I always find that this is a really interesting key for me to look at how the rest of the market is doing and the rest of San Diego County is doing versus how we're doing here in San Diego, North County, San Diego. So the number one best performing market in terms of year over year, so last September versus this September, median price increase, East County for the last 2 months has actually been number one. I haven't looked up before that, but they're up 4.1% year over year. It's the second month running. South San Diego, which is like Chula Vista area mainly, is 2.5% up year over year since the same time frame. This downtown San Diego, the Metro San Diego area, is pretty much flat, but just up from the same time period where it was last year. And coming in at number 4 is North County, San Diego. We're down 3.1%. Okay, and that's again a total of attached and detached, like as a whole, median price point. So North County, San Diego, having more of a cooling than the rest of the county when it comes to that. Now, in North County, San Diego, the best and the worst performers, Solana Beach is coming in with a whopping 20% median price appreciation over the same time period last September. Now, again, there could have been some larger sales that pushed those numbers up a little bit, but for the last couple of months, Solana Beach has been really outperforming their performance since last year. Again, they're 20% since over median price point over what they were last year in September. Now their closed sales are actually up. I think it was 54%. So their closed sales are up, and the appreciation or median price points are up as well, pretty significantly. Solana Beach is, looking like a pretty hot market right now. Now Carmel Valley, which has typically been one of the top performing, hottest markets here in North County, San Diego, they're actually down 22% in terms of median price points versus last year. Now again, these are total attached and detached combined, but they're down 22% in terms of median price points, and their closed sales are actually down 22% as well. I think it's 22.2%. So again, out of the entire county, that is the lowest performing appreciation year over year. So I hope you got some value from that. Again, if you do have any questions on how this information does impact your situation specifically, because again, real estate is very, very specific in terms of the microclimates in the specific areas, give me a call, text me below. Love to talk with you and help answer any questions to help you make the right decisions. All right, guys, thanks again. See you next month.